Hi everyone, welcome to our market talk. So 2 weeks have passed. Markets are ripping, bears are crying, or maybe bears are not bears anymore. We don't know. We'll see. I'm sure we have a lot to talk about. So Ted will not be here today with us, so it's Raphael and me. And before we start, some exciting news. So finally, my fractal range released the targets newsletter, and first targets for this quarter and month are already published and available for elite subscribers. So now is the best time to subscribe or upgrade your plan if you haven't done so before the price increase. Uh, and yeah, today I will touch a lot more about these targets and, of course, my views on the market. Because, oh man, this week it's only 3 trading days of this month, and some sectors and some stocks are already at very important levels. But yeah, so Rafael, how are you, and what do you see in the markets? I'm sure you have a lot to talk about.
Hey, Vai. Yeah, I'm great. Um, so yeah, let's jump right into it. Let's go celebrate on this market rally. So up, okay. Do you see?
Yes, I can see.
Okay. So basically, the what I talked about 2 weeks ago happened exactly as expected. So the show was on Thursday, the 18th, and I said I would be buying on Friday and Monday. While everyone was talking about the Iran war and buying puts, I was actually buying like a madman and expecting the rally to start. This is what we got. So here's why I bought, and we got the rally. Now on to the next play because what we want is to focus on what's going to happen next. So something I touched also 2 weeks ago was the fact that we would get this rally. Now we are starting to unload some of our position, and we are already. I mean, I'm planning the next ad. So what I want to see now is the continuation of this move up of the long-term low of the range on ES, but IQ is exhibiting the same kind of pattern. And I want to be adding when this low, so here in pink visual, but you can find it. So if you are watching futures, ES is right here, so long-term range is here. I want to see the long-term low of the range actually pick up with the normal low of the range. When these two guys meet, this is the place where I'm gonna add again quite big. So my expectation would be that after this very nice rally, we should get at some point 2, 3, 4 days in a row of either I would say aggressive red days or at least some kind of maybe two aggressive red days, some consolidation where we can start to buy again and where people who actually missed this move are gonna start seriously buying. So for now, I'm unloading and I'm watching for this to happen. Remember where we were when we talked 2 weeks ago, and can you see where the long-term low of the range is now? So you can see that this is definitely materializing the way I expected. So the next play is that some kind of consolidation, some kind of sell-off maybe next week, maybe the week after, where these two guys meet. And remember, this is a place where you maybe will not want to press the buy, but this is where you should. My expectation remains the same. I think we're gonna get uh, one 1 month and a half, 2 months rally before we can expect to get some kind of significant sell-off. So until then, buy every dip, and yeah, that's the motto. For VIX, what I'm expecting is the same as 2 weeks ago. So far it has not materialized. I'm expecting volatility, so blue, to start to go down. So this is also part of the next step. During this rally, we should be starting to see a shift in volatility, preparing for the sell-off I would expect in 1.5 months, 2 months. For now, nothing is happening. On the dip, I'm expecting for, yes, I would expect actually VIX to hit the current cap that is starting to materialize on VIX. For those who don't know, the cap is when the normal range and the long-term range, they actually meet together. Their value is almost the same. And you can see here, top of the range in blue and the top of the long-term range are almost equal. So 20.27, 20.69. My expectation would be we get some kind of so sell-off in equities, VIX starting to pop, bears coming out of the woods telling us we told you so, and this is when actually we can buy the dip. And when this happens, I think this is when we're gonna start to see trade of volatility. This is a black line here, actually get below the price of VIX. And this is when we can start to focus on the next phase. So again, VIX up to this area, ES with some kind of red days. On ES, long-term range, normal range, mid, VIX to 21, we buy. And then we can focus on the next play, where either we unload our longs or we start to buy volatility or puts. But this is the play that will, in my opinion, again, will materialize in 1.5 months, maybe 2 months. For now, we just continue to add to the dip. Number two, so DXY. So DXY, again, I'm expecting always to see the bottom happen. It could be the case again. I mean, DXY is definitely above trade. We have here trade in terms of volatility pointing down. Volatility is doing lower high, lower lows, which is usually very positive for the asset. But I tried to short your USD when we are here and it didn't work. As I said a month ago, I'm waiting for trade and trend to cross before considering a position there. Another thing I'm monitoring, which would make me pull the trigger on your USD short, would be trade here in black, trade of your USD, trade of volatility of your USD, getting to the mean daily value. So you know the song, I check historic minimum value of trade of volatility because this is where volatility has no more room to go down because its trade has gone too low, and this is when volatility start to explode. So I'm waiting for this black line here to get to the mean daily value. Mean daily value being 1. I think it's 1.1. Yeah, 1.1. Okay, when we get there, I'm gonna short Euro USD. And when we get there, you should see the blue line here starting to go up, meaning volatility will be up, Euro USD will be a short. This is the way I want to express my dollar's bottom view. Okay, I want to short the Euro USD. So still waiting. Unfortunately, still waiting. I tried too early, and now I'm waiting for the right setup. So CL, I'm monitoring. I think I started to talk about that a month ago. There should be a trade brewing. Of course, if you took this one, you already got a very nice trade, so maybe you don't need to watch anymore. But I'm watching. I think a trade is brewing. The problem is I need to see trade above trend here. So black above green. So far, we are not there. And one other thing that is making me patient is Brent. Brent is actually, in terms of volatility, still bearish. So you can see, so bearish volatility. So red here, price is below red, mean in terms of volatility, Brent is bearish trend. In MFR system, it's also neutral, so I'm still waiting. When I see trade cross trend, I'm gonna take the trade, the long trade, but I need a confirmation also on Brent. That would be nice. Gold, so chop. I thought after the cross here of trade and trend that we would rip. It ain't. Volatility is still chopping. Volatility blue here, still rising, doing chop. So I don't know if it's a consolidation period here. I don't know if it's just maybe the top is there and then we get some crazy sell-off. But definitely volatility since we got out of our trade, long trade, sorry, here on April, it's just a chop. What you want to see when you want to long an asset is actually volatility here in blue at the floor and stay at the floor. For now, unfortunately, this is not what we are seeing. I thought after the cross of trade and trend that we would see trade go down, but it's not. Okay, so watch volatility. Volatility should tell you exactly what the trend of the asset is and what you should expect in terms of price. So again, volatility is rising, the asset is chopping, volatility is at the floor, pointing down, the asset is bullish. Now, Bitcoin. So Bitcoin, last time I also explained the fact that I want to long this asset when volatility is at the floor. And I highlighted that in the black box here. So here, when volatility is here, you want to long. We got the same kind of setup in April and May. And since then, volatility is actually quite elevated for this asset. So you can see the difference here versus here. So if in blue volatility it starts to go down, I will add to Bitcoin. But for now, I know Vi actually is more bullish than I am. But for now, I'm still watching. I want to really see volatility of Bitcoin back in the box, at the floor, and I will not care if I miss this move here once we start to have volatility in that box, because if we get the volatility of VIX at the floor, Bitcoin is gonna rip to the moon. Okay, so what does it matter if you missed, I don't know, like 5K bounce? Now the interesting part is yields. So I tweeted, I think it was last week. Yeah, last week. Yeah, the US 10-year and US 30 years had actually broken trade, and we actually they went to retest MFR trend. So far they are holding. So far they are holding. If you are monitoring MFR trend, you can see we went there, went to neutral, held. US 10-year is back to bullish. US 30-year is back to bullish. US 2-year is back to bullish. Okay, now the problem is, in my opinion, volatility of the US 10-year, volatility of the US 30-year, and volatility of the US 2-year is pointing up. You can see the difference with here. Volatility is pointing up. It's in higher places, making higher low, higher highs. So maybe if you are long bonds, it's not stupid. I mean, as long as we are not seeing volatility definitely break back below trade and starting to remain at the floor for yields. I mean, if you took the long bonds at the break of trade, you should hold. That's my view. Again, I think Vi disagrees with this view. But until I see definitely a volatility of the yields back to floor, breaking trade, I mean, for me, it's a good bet. Um, yeah, that's it. I mean, I think I talked about everything I was watching. So equities waiting for 2 to 4 days sell-off, consolidation with a retest of 20.5 on VIX to buy and to hold for again 1.5 months to 2 months, and then prepare for I would say a larger sell-off. That's what I'm watching. And your USD almost there, almost there. Uh, Stop share. This is for you, Ray.
Thanks, Raphael. Yeah, so a lot of interesting things are happening. I sent a request to share my screen. Thank you. Okay. Okay, let's start, and I will start from gold. 2 weeks ago, I was expecting a dip in gold, and I have a very strict and predefined level of interest in gold, which is 33, 32, which is, of course, the settlement price of the last contract, which is, for now, for this period, the most important price for us, all who are interested in gold. Of course, later we will have another rollover. We will have new pivot. But yeah, so and what happened? The price is trading around this pivot for now. So I'm definitely not bearish because price actually failed to trade below the pivot for longer periods of time, and now is above that 33, 32 level. And when it comes to our targets, it's a quite a tricky situation right now because, of course, if we are using the quarterly or monthly pivot, which in the case of July is the same line. Basically, it's here and the market is above. So what I would be doing here, if market retests the pivot and then closes above 33, 32 again, I would buy some gold. For now, I don't have any position, but I would be interested in gold. And shorting is quite simple here, even though I don't think that gold will experience a sell-off, but basically we are short below 33, 32. It will give you a very cheap trade with a very clear scenario, and if it goes below 33, 32, but goes above again, you are not short anymore because of course this is our process, and risk management is the most important thing, and you need to execute at the places that matter. But yeah, for targets, we have quite a narrow range compared to the previous periods because last month gold was basically trading uh, in that range. But yeah, my model say that 3202 would be the magnet to the downside and 3428 to the upside. Yeah, so gold now is definitely not bearish. For now, I don't see anything that says, oh, just short that thing. But it can change very quickly because, first of all, we are very close to the settlement price, and also our pivot for this month is also here. So yeah, but in equity space, oh my God, we had this crazy week. And yeah, so month and quarter opened, we had couple of trading days, free trading days of the month, and yes is more than halfway to its base case bullish target, which is 633.44 in ES in NSPY, and yes, it would be 64.44 for those who are interested. But we have another very important level for us for ES, which is 6402. 6402 would be my spot to watch in VS, and I will show that same spot in NQ, and actually NQ is even closer to that than ES, and actually it gives even more conviction to for us because when NQ is leading, these are the best trends. So again, fading this is very, very hard. But yeah, 6402 would be equidistant swing from our previous pivot, and for now, this is my main level to the upside to watch. And on NQ, we have on NQ we have the one which is way closer, because actually it's approximately 23,160. Somewhere here. So I mean, for NQ to reach this is a nothing burger, very easy to do. So yeah, and that's what I mean when I say NQ is leading, because the bounce was way stronger. It reached its previous quarterly pivot before the ES. It reached its yearly opening price before the ES. It made it reached the previous all-time high before the ES, and now it's going to its targets also with a very big strength. So just keep that in mind. And yeah, but because NQ has way higher volatility and trading ranges, our target is first target is 23,753. And for those who are interested in QQQ, yeah, same situation. It looks a little bit different compared to SPY, but not that much. It just has more upside to go to 568 ish. But we had quite a few sectors that are already interesting after 3 trading days of the month. So let's go to the sectors. And I will start from XLV, which basically whatever news were reached its first target tick by tick on the first trading day of the month, and then retraced. So yeah, with XLV, I would love to buy the break above this level again, or to see how it reacts at the pivot. And yeah, so but this was crazy. And yeah, so 137.76 was our base case target, and the high of that day was 137.76. So it's not a coincidence. Those who have access to targets, you will see that it is happening over and over again. That's why it's not the best idea to try to front run these in advance. We want a clear break. But yeah, so this was XLV. Now we can take a look at XLY, and XLY looks different than XLE. So yeah, today it actually closed above our base case. So if we don't get a some sort of a correction on Monday, because of course tomorrow markets are closed, and at the same time I want to congratulate everyone with 4th of July. But yeah, if we don't see any retracement on Monday, this thing will go, and the next probable area will be the yearly open. So our yearly pivot, which is 224.4. Actually, and above that we may even reach a bull case target. But yeah, all these targets are available in the trading plan section on myfractalrange.com. There is also a first article where in this article there's not it's dedicated to not to analyzing the assets or markets, but to explaining what targets are, how to use them, and why they are useful. But yeah, you can download all three spreadsheets and you will have all these numbers for all major US equities and ETFs. and I plan to add even more. But for now, it's like 1,100 plus assets. Yeah, so these two are different one from another, but both at least reached its base case target almost immediately. What we have with XLB, so yeah, there is a reason why today I wanted to show these things that this thing ripped, and now I would literally expect a retracement because the second target is where the price should definitely stall at least for a while, and then we would have our annual base case target, which is also attached in trading plan section. But for now, don't buy this thing. Do yourself a favor, wait for a retracement and see how it reacts at a previous target or even lower. But yeah, and of course, start with ranges first. Targets after that. There is a reason why I decided to provide targets as a spreadsheets because I don't want people to start from targets. I want people to start from ranges, and when we see good setups in the assets that they are interested in and ranges supporting their views, then it's time to see where the price is trading relative to its goals. But yeah, because previous quarter was crazy, and for this quarter, we have plenty of upside even in the base case. But keep in mind that for this month, basically, knowing that we only had three trading days this month, don't chase. Do yourself a favor and don't chase. Yeah, but this was crazy. XLC, what we had with XLC, yeah, nothing. This one is basically at the open price of the month, which is our quarterly and monthly pivot, and for now, nothing is going on here. XLE, of course, this is interesting. We had quite a strong 2 days. Today was not that strong, but of course that's what is expected. Expecting today was not a full day and day before a holiday. So yeah, but XLE, if you want to buy XLE, you trade it against the yearly open. And what I mean by trading against, it means that if it goes below, you are not long anymore. That's basically the plan. And 88.8 is this month's upside target. XLP and XLF worth talking about, but yeah, XLP same situation as with some previous sectors. It failed to reach its target, but it had some retracement. So watch the reaction back when it's back to the pivot or the break of this target. Don't trade in the middle of nowhere. And XLF is nothing. Still we have some room. Nice runner-up, but we still have plenty of room, and both on quarterlies and even this blue line, which is our base case for the year. Yeah, so these are the targets that I wanted to cover in the show. Now we will move to our common things, so correlations and overall view of the markets. Before that, I will just touch on Bitcoin because, of course, with Bitcoin, I'm not that surprised actually that market is going up, and I think that Bitcoin will go up. It's just a question of time. A couple of levels, very important levels to watch is around 114,000. And then the main target would be above 122,000. The final goal of the cycle that can be even as high as 144, but when it comes to 144, there is no time frame. We don't know the cycle. Sometimes it can last months, but sometimes it can last years. But yeah, Bitcoin, I'm bullish on that thing, and I added a little, but depending on where you entered, if you are holding Bitcoin, you can trade either against the pivot or Even I know Raphael also initiated the position at yearly open. So if you're holding, you have plenty of room. But the most important is to add to your winning positions and never to add to your losers. You need to cut your losers. You don't need bags in your portfolio. So for now, there is literally no reason to cut Bitcoin, and how Bitcoin behaved relatively to its previous targets. We can literally check that out because last month was quite calm for Bitcoin. So yeah, so now we have these new targets, base case and bull bear case. But previous month, Bitcoin basically did nothing. It had a pivot, and after that pivot, it just traded around that pivot. So now I expect some volatility explosion in that. And yeah, base case movement is still narrow, but keep in mind that. Bitcoin has plenty of room to go. Yeah, okay. So now let's go back to our usual things. So we will talk, of course, we will start with average correlation to SPY, and we will start with a short-term one with, yeah. So for those who think that everyone and their dog is long, that the trade is getting crowded, and that we may definitely see a strong correction soon and fast. Well, think again. Of course, everything can happen, but correlations are going down, and there is quite an easy explanation to that. Just watch what stocks are driving the markets. The number of S&P 500 stocks that are at all-time highs and so on, and you will see which sectors are driving the market. It's definitely not the entire market. And also important to mention the small caps, which of course is not part of this calculations, but also don't short small caps here, definitely. If you are long, just manage your risk wisely, but don't short because if, and I think it will happen, but if small caps catch up, the move up will be brutal. So you don't want to be on the other side of the trade. Yeah, but let's go back to correlation. So correlations are going down and they are low. Yes, at these levels we can expect correlations to start going up again, and the correction can be one of the potential reasons, but I just wanted to mention that for now, just watch tech stocks and a couple of other outperforming sectors that I showed, and compare to the lagging sectors, and wait for the periods that when all these start moving together. If you want to predict or to if you expect some correction, because it will not happen unless we see that. And if we change the period to the higher one, 21 days, you will see that situation is also this, and the correlation is at 0.55. So you will always see, almost always see higher numbers for longer periods when it comes to average correlation to SPY, but yeah, it's going down and it's at 0.5. So keep that in mind. And the matrix, of course, matrix. And the matrix, we will go to first 10-day correlations, and you will see what's going on here. Yeah, so first I always start with the stock bond correlations, no surprise. And if we are looking at SPY to TLT instead of using futures, we see that it's a positive one, 0.28. And what is correlating negatively? Of course, TLT to dollar, and we have negative correlations with XLE because first of all, it's quite common to see these things, and second of all, last month was let's call it interesting. I don't want to go into geopolitics or politics or something else, but let's call it interesting. So no surprise there. But yeah, basically, we have dollar, we have bonds, and gold. So your usual suspects, but SPY TLT is a positive correlation, and SPY TLT positive correlation also can be one of the reasons why some people may expect a correction, but here, just look at this thing. This is the SPY. And just by looking at it, don't fall into this retail trap because fading this train is crazy and retail are doing this same thing over and over again. And yeah, so because that's how human brain works. So it's very high time to short it. No, it's not how it works. And save yourself from trouble. Yeah, and let's go to the higher look back period. By the way, this matrix is available. You can access that. It's not proprietary. We built it available for. I mean, there's nothing proprietary about correlations. It's just how we visualize that. At least for me, in my opinion, this is the easiest way to visualize that. Yeah, but SPY TLT negative there. So unless it catches up, we will have more reasons for this bull to continue. And I will switch now to TLT because I have this script, which is a correlation to the SPY. And the 21-day correlation to the SPY on a historical basis looks like this. And as you can see, numbers match compared to the numbers in this matrix, but how it evolved and it's going down. So it's going down. So in the long run, again, it's not good for bears. And yeah, so don't try to front run the moves that may or may not happen. So just be aware. And yeah, my view on bonds is actually, I believe Raphael was talking and said that I may disagree, and this can be the case. Okay, let's get rid of this matrix and let's just analyze TLT. And TLT actually the only place where I would be interested to try and buy it is way lower. I want to see the reaction at the base case downside target, but knowing this overall market and also by following this drama with Powell and everything else, and of course commodity prices. I never predict macro or use macro for trades. Macro is very important in our lives and to understand what's going on. But at least for me, it's very hard to initiate trades based on that. But based on some commodity prices, if you look at commodity futures, most of them, you can expect that maybe, just maybe, that inflation numbers actually will not fall more as a lot of people expect, and maybe even go up. But of course, don't use this what I just said as a some great idea or not, because it's not. But I believe that this drama will continue, and also the flows. And I would only be interested in buying, for example, TLT at maybe 86.3 if we see a rejection of that level, and if it's not breaks. If it breaks, that's how momentum targets work. If it breaks, it will be brutal. So yeah. So bonds, I'm not a buyer here. I'm not short. I was short TLT multiple times this year. It was nice, but for now I don't have any positions. Actually, I'm short Euro futures 60 for the last couple of days. based on annual targets that are actually not even bull case, but it's, I don't know how to call them, but when bull case target breaks, I don't know, we need some suggestions for names, but whatever. Extreme levels for euro. So I just initiated a 60 futures short position a couple of days ago. It basically went nowhere. That position is in profit, maybe 40 pips, so it can change very quickly. But yeah, I am trying to short the euro at these levels. I can actually show something. Oh, I'm even connected to my futures account. Okay, yeah, my entry is closer to 1840. Yeah, 1840. So just keep that in mind. And if we remove settlement, yeah, okay, let's use settlement. It makes more sense because today was not a really full day of trading, but we'll see how it goes. And I think you already understand that I'm quite okay with taking the small losses many times, just with a goal to catch big moves. So yeah, of course, if we go above, I will not be short that anymore. Just keep that in mind. But uh, but yeah, so for 60 futures, these are the targets because we are like three ladders above. That's why I was laughing about this new name because base case for this year was here. Bull case for this year was here. And now let's call nuts target. Nuts target. Well, we are above that as well. So yeah, so plenty of momentum there. And yeah, but for this month, I would expect it to maybe even go to 1.16 or something. That would be nice. That would be nice. And definitely, if euro goes lower, I will be scaling out partially. But yeah, my main view is don't short the stock market, don't chase. I'm sure you have long positions in equities already, so just scale out at important levels when you see, for example, ES at 6402, or when you see indices or your equities trading at important targets. But for now, this market is strong and momentum is very strong. NQ is leading. Best trends are always when NQ is leading, and also RTY, which yeah, I was not talking about RTY, so let's talk about it. Finally, and this is of course funny, but finally, RTY is back being positive on a year. So we have this yearly pivot, and it's above. And RTY had a decent rip already, and it already touched the base case target. But be aware because momentum here is building, and here if it breaks its target again and doesn't come back, we will see it ripping because it has a lot of room to go, not only to catch up, but yeah, for and especially quarterly targets. Just look at that. Just look at that number and be careful. Be careful. So we have a couple of levels to trade against here. We have of course, yearly pivot. We have this months and quarters pivots, and yeah, this target that needs to be broken to the upside. But yeah, Russell looks even more dangerous for bears than any other instrument here, especially that it has plenty of room to go. Yeah, so that's it from me. My most interesting assets are gold, which I'm not touching, but gold is at very important levels, and equities are not shorts. And yeah, I expect dollar to correct to the upside a little, but this one is will be even more conservative from risk management perspective because we'll see. But yeah, don't try to front run this, and yeah, good luck with your risk management because that's the most important thing, and that's what will keep you in this business.
Thanks, I have a question actually. So, um, regarding the monthly targets, the quarterly targets and yearly targets, what's your plan on teaching the users
Oh,
about some specific setups, etc.? We have
that
something.
article that I published has all the necessary information. That was the main goal of that article, to explain what targets are and how to use them, and also that we need to start from the range. The goal will be, of course, the community part of my fractal range, which we never had, and now first step in the community is, of course, the ability to just post comments. But posts, these blog posts and targets will not be the only thing. There will be analysis when something really interesting is happening, and there will also be some YouTube materials. But my main goal here is for people to understand that you can't overcomplicate these things. This is just a goals for this market where it would make sense to execute if you really want to execute. But it's not something where you execute a stock you know nothing about, you never wanted to own, but you execute just because that's the target. But I think that first article is talking exactly about that and nothing else. So I think that this section is covered. But of course, we will be working on community section because the problem with education, especially when it comes in to the trading space or whatever, but people will start trading random things at random places and at random lines just because these lines align, and then they will not even know that some CEO is being charged with a fraud or company is having some lawsuits or whatever, which I don't want. But yes, a lot is planned, but I don't want to discuss all these things until we have the exact plan and exact details what's coming. But big things are coming for sure. And the community section is very important because we always read emails, we always read messages and comments. And over these years, it's obvious that in order for our users to be even more successful with the tool and use it properly, we need to provide some additional information, not only a bunch of numbers, which for the first years of my fractal range, basically that's what it was, a bunch of numbers, even though these numbers are important maybe for users, for me, for URAP or so, but people need more than just a bunch of numbers. So of course we are going to that direction.
Very good. There were a question. So SKP, Raphael, where do you find the average volatility data? So I don't know what average volatility data means, but I would guess you're asking about
It's
the,
your script,
yeah, you're asking about the
1.1.
script. Yeah, yeah, yeah. So, so my idea when I created this script was I want to have the VIX for every asset. That was basically my idea. I like to look at the volatility of an asset because it's driving the asset direction. It can give you an idea about maybe how this asset can behave in the next weeks, month, maybe years. So the idea behind developing the volatility script, which is available for elite subscribers, sorry, was to have the VIX for every asset. And I wanted to use this volatility. So this is a blue line that you always see on my script. And I wanted to use this volatility and generate what I call trade and trend. Trade being a shorter time frame than trend. The idea being that what you see trading on a shorter time frame, if it aligns with what you are seeing trending on a longer frame, when they are aligning, it can give you a direction for probably month. When there's a misalignment, for example, you have bullish trade but bearish trend, or bullish trend, bearish trade. When you are seeing misalignment, the time frame you have in mind, or maybe the way the market is supposed to behave, is going to be different. So that was the idea behind this script. And what you are seeing on the website, on the chart, is this volatility, this trade of volatility, this trend of volatility actually converted into price. So the one you see at the bottom is the volatility, trade of volatility, trend of volatility. And what you see on the chart is actually this exact same data, but converted into price. So it gives me the ability to see exactly what's happening on the price, considering this aspect. So I designed the script myself. The basis of that was actually a paper about what's called the VIX fix. It's what I would call the synthetic VIX for every asset. That was the basis of the work that I started, and this is the final result. Again, they are available for elite subscribers, and any question you may have about this script, you can send an email. I published videos, tutorial on our YouTube channel about those particular scripts, so I invite you to have a look at them. And if you have any question, like, okay, I'm seeing that, what do you think about this setup? I will always answer your questions. So yeah, I hope it was what you were asking for.
I believe that the principle of finding these values is the same like with my momentum score, which I use daily, which is just to zoom out for to the long period of time. So zoom out your charts and see historically where that indicator was at what levels it were, because that's what I always suggest and do with my momentum score. I quickly will show you that, but momentum score we can now just maybe use just one, just for example. But momentum scores, and every asset is different. I mean, if you take Tesla, for example, which is a ridiculous stock, but for Tesla, you will see that sometimes the score can go to -3 or +4, but if you go to something like, I don't know, XLU, whatever, you will see that it's rare to see it even at 2 or TLT or dollar, for example. And you find what's normal for that asset, and you find the average of that, and you see, oh, so for this asset, this level is very important. I don't know if that's the exactly how it's supposed to be used, but at least that's how I use Raph's to how I look into these tools. So I hope I added some value here.
Yeah, it's so for example, to mirror what you said about the momentum, this is how the minimum value for trade came to be.
Yeah.
I just saw, wow, anytime trade of volatility reaches that level, you have an explosion of volatility. So then I started to look at the things I wanted to trade. That was, I think, a very important point Vi said is, I mean, it's not because you're some kind of macro guru is telling you to buy a stock you've never heard about that you want to you need to buy it, right? So I focused on some particular assets like dollar, VIX, of course SPY, QQQ, ES, NQ, some stocks I like, and I just started to map where the explosion of vol happened based on the minimum volatility, for minimum value of the trade of volatility. So it's the same kind of idea. You have these levels, you know when trade is going there that you should expect an explosion of volatility. So
Mm. Yeah, same approach with my momentum, where I mean, if you see +2 on TLT, you can say, "Oh no, it's
yeah.
very overbought." But if you see +2 on Tesla, you say, whatever." I
Yeah, I'm gonna
mean,
add.
whatever. Yeah, yeah, whatever.
Let's go to 4.
Yeah, it will go to 4. Because my oscillator is what is different, not only about models or formulas, but what is different from other oscillators people are familiar with, that it doesn't have a floor or a ceiling. It's not like it can only go to +1 or -1. It can go to any value it wants, but you need to understand what's normal for the assets you are trading.
And again, all the scripts we show in our videos, they are available for elite subscriber, with the exception of the monthly target, quarterly target, and yearly targets, which we are not opening for scripts. But the rest, momentum score from my volatility thing, the correlation matrix I published recently. I mean, all of them, they are available for elite subs.
Yeah, things like average correlation to SPY or correlation matrix, I think they should be even moved to everyone, because correlation, in my opinion, is not something that can be like claimed like, oh, it's mine. No, it's not mine. It's just a way to visualize stuff. So so, but yeah, I believe at least one of these is free.
Mhm. Okay. No more questions. I
Yeah,
mean,
so we'll see what the next 2 weeks will bring. And of course, especially this week was crazy. We already saw some sectors ripping. So yeah, I will watch gold, I will watch dollar, and of course, major levels and targets for indices. And yeah, so thanks everyone for joining. We hope it was useful, and see you in 2 weeks. Thanks, Raphael. Bye.
see you in 2 weeks, guys. Bye bye.